Hi folks, hope you're doing well today. Welcome to the video. So in today's video, I just wanted to run through a few trades with you guys, and I might not give you a lot of context as to the why and the how of everything, but I will show you some trades that I took in the last few days in my live account. So if you're into this stuff, well, stick around and leave a like on the video for the YouTube algorithm, and let's get right to it. Cheers. I don't necessarily have anything strictly planned. I'm just going to show you some trades that I was in. So that's about it here. We'll start with this one. This one was from Monday. So what's really interesting, first of all, is that I'll show you that this screen recording, I can actually drag it over, is a recording of two screens right next to each other. So you're going to see this is pretty much what I'm looking at on my other screen. And the most important thing here is these things right here, the 15-minute footprints. All right. So that's all I'm going to say right there. And let's get to looking at this trade. Basically, it was a long trade that I was scouting, and I can't really give you a lot of context, but basically these highs around these 1990s here were a little obvious, and I was looking at, the sellers coming in around this general area, and I thought we were in a location where traders were generally being induced into going short or taking that side of the market. And what normally happens is before big moves, market participants or market specialists will use all their tools at their disposal to encourage traders to take the wrong trade. I'll go a little deeper on that as the video progresses here, but so let's fast forward this video and see what happened. This was the area I was looking to get into from a risk to reward standpoint. All right, so you see I'll get long here right around 972, and let's look at this trade very briefly. I can even fast forward it for you. And what's really interesting is how the market just, moves in my favor immediately, and the market's kind of moving to crush the highs at this point. All right. And my target would have been right above the highs, around 1990, just a few points above that. So you can see that the market pretty much as soon as I entered the trade moved in my favor. It doesn't always happen like that, but that's something you want to aim to happen. In the next couple seconds here, you're going to see a few buy stops get run and the thing just gets taken out. So you see right there, it didn't hit it the first time, and then you're seeing this sort of thing where the offer's lifting and then we come back down. That's a sign that traders are being forced to buy at the ask, and I get out there. That's it. So that was the first trade, and I'm going to fast forward the video now to a later part in the day. So we're continuing to watch here. The market continues this sort of rally, and through none of this was I interested in taking a short position. We have a bit of a high volume node right around this 12,000 area, and if the sellers are going to come through, this is going to be an area where they start to come through. All right. And again, remember, if you're a big institutional player, you're not just going to dump your sell orders on the market in one shot. You're going to kind of be patient with it, and you need to basically wait for those strategic moments. So fast forwarding a little bit, I see the sellers sort of start to arrive. Now, this is where things get interesting, because I'm looking at this action and I'm interested getting into a short position just because of the amount of selling we started to see at this point and how the bids were just getting taken out aggressively. And again, you have to always look at it from a risk to reward standpoint. Where exactly are you leaning and why? And you're going to see me initiate a short position here pretty soon. So let's fast forward the video a little bit more. So 30 seconds later, you'll see me get filled here at 1991.50. And basically, I would have been leaning on about 12,000 at that point. And again, remember, we had that obvious low. This 975 is a double bottom, very obvious level. And I don't have necessarily a defined profit target for this trade, but I'm definitely looking for the lows to be tested at this point. But again, we have to continue to watch what is occurring in the market, because if you want to see signs confirming your bias in a trade, normally what happens is you want to look for signs that the market is trying to convince participants into taking the opposite side of the trade and then failing. So in this case, we had something like that where we have a little bit of rally and then we move down to test the lows. So let's fast forward here, and you're going to see sort of a bit of consolidation. We trade lower, I'm on side, and now I don't have necessarily any reason to cut this trade, and I am expecting the market to come up and test my break even. I wouldn't consider my fill the best possible fill in this context, so I'm not necessarily going to put in a break even right away. If I would have put a break even there, the thing would have gotten tested right here. We have some above the ask, and then we immediately trade lower. When we see things like that, that's not exactly a sign of strength. Signs of strength is like when you see sellers enter the market and they immediately get answered by buyers, or we immediately trade higher. That's a sign of strength. Sign of weakness is when we trade higher on buyers and then we immediately trade back down. It's a sign that as soon as the buyers were in the trade, they were stopped out. So you saw that we tested this, and now we're kind of bidding lower. So that's not a sign of strength in my opinion. And again, you're just continuing to watch. So we continue to watch and we slowly trade lower. I'm not trying to cut the trade just yet. We're just still watching it. So So fast forward a little more, we're slowly grinding, and sooner or later, there's going to be a point here where we start to see a large amount of institutional size come in and hit the market. You know, this happens all the time. This happens on the NASDAQ and the S&P. I don't really know what this is categorized as. It could be institutional players that are managing their positions or hedging, rehedging, that kind of stuff. And what's interesting is that this stuff tends to happen before big moves and sometimes after big moves. But I noticed it happens a lot before big moves. So we continue watching, and sooner or later the sellers come through. And let's just watch how this thing takes out this low. We see some pretty aggressive sellers. And now what's really interesting, and I'll share this with you guys right now, it's that when the market is moving in a direction and there's clearly liquidity trapped on one side of it, you will always see things like this, where you see a big 47 lot trade on a bid and it just trades right through it. And you'll see these big, orders getting filled like it's nothing. Really, the reason why that is because there's so much liquidity on one side of the market that's trapped or being forced into selling or buying, is that it's so easy for these big orders to fill. If you were short a bunch of contracts and now you're trying to cover, when the market's really panicking, filling like 40, 50, 100 contracts is like nothing because there's so much liquidity on one side of the market. So look at the amount of contracts that trade down here at this point. You can see I got my limit down at 67.50 and it easily gets taken out because there's just a lot of liquidity. So that was one trade. Let's move on to a trade from today. So let me get this set up for you guys and I'll be back with you in a moment. All right, so this was this morning, November 18th. This was the first attempt at a short trade, and this was a stop out with a small loss. Still continuing to watch at this point because, depending on your trading system, I've tightened my stop a little bit currently to allow for, one or two errors before nailing a bigger move. So I got stopped once on attempting this trade this morning. What happens is I get stopped out, right around the high volume area. Fast forward 30 seconds, the sellers come back and I get interested again another time. So I'm filled at 75.5. And again, guys, I'm not really giving you the bigger context of this whole thing here because basically I'd have to go into detail explaining to the relationship between the current low volume and high volume areas on the 30-minute chart and on the daily chart, because a lot of those things tie into some of these trades, even though they're short-term trades. So let's get to the trade here, and you can see that this is what's happening. There's sellers kind of taking control of the market. Let's fast forward a little bit, and I'll try to go through a few points here. So we sell off, and then the market catches a bid. All right, so this right here is great. Okay, so we have a very clearly defined area, which is 965 at this point. So in the pre-market session, we had an offer holding here, and there was a large buy imbalance, basically a seller who was just sitting on that offer, not allowing the price to go higher. We traded lower. As the market opened, we popped higher. So after all of this, our offer is still in play, of course, and we're watching if he's still going to be in play at 965 at this point. So we have a rally, and I like seeing this because, like I told you earlier in the video, when you're on side of a trade, normally what happens is the market will give counter trend signals for participants to enter the opposite side of the market. And again, it's all about 965. So let's take a minute watching 965 on the tape here. And the reason why I say this is a counter trend signal is simply because we have a massive sell and then a massive rally off of the low. And it paints somewhat of this, hammer engulfing pattern, very typical idea among candlestick traders. And of course, we do know that this can be very deceiving, especially in certain contexts. So again, we're watching 965, and let's see if some sellers show up. So there we go. We have a lot of sellers just hit the market in one shot that just took this thing down. Like literally, you even saw that the screen the price was at 967 and then we're at 958, like in 1 second basically. So after seeing that, if that doesn't confirm a bias, then I don't know what does, to be honest. So at this point, I'm pretty confident holding this trade until under this low for sure. And again, this was a little bit tricky because there was sort of a gray zone, and I'm going to show you this on my other screen right here, where you can see my 15-minute chart. I'm looking at this sort of gap in the profile right here. And basically I'm looking at, all right, where is a comfortable profit target for this trade? So basically, I'm not thinking it's going to go straight away and crack 929, but I'm thinking it can get somewhere close to that before it can start to consolidate a little bit. So if we fast forward the video a little bit, let's see what happens. We end up taking out this low pretty easily. And I'm still on the trade, and I filled it around 940.75. So you saw me take off the order right there, and we immediately continue to trade a little bit lower. You know, so generally, from a general perspective, I honestly think that around this 940 to high 930s was a good, comfortable target for a first partial, right? Everything other than that, if you were going for the overnight low, that would have been a runner in my opinion. But again, it depends. Since I'm only trading one contract, I sort of always take profit at those comfortable first partial areas. And you can see that the market did continue to take out the overnight low right there. And that would have been the end of the story. All right, guys, so in this video, I showed you a few trades. I know I didn't give you a lot of context, but if you do have questions, let me know in the comments below. And I'll see you guys in the next video. Hope you're well. Take care. Bye.